Hello, everyone. Hope you're doing well. I'm sorry for a little bit of our delay. We're making a small compass so that everyone can join us today. And I would like to appreciate the opportunity to be addressing all of these tax matters to all of you who took a little bit of your morning, afternoon, or day, night, or night time. Sorry, to take advantage of this a little bit of lecture about the Portuguese, namely the tax incentives that we have here. So alongside with me, I have my colleague Natacha. We both belong to CRS law firm. I'm one of the founding partners, and Natacha is my right arm in the tax department. And at our law firm, we have offices in Lisbon, Porto, and Algarve. I'm based in Lisbon. Natacha is based in Oporto, and we do what it takes to help our clients to achieve their ambitions. So we are a full-service law firm that, based on the rigor and excellence of our expertise, but alongside always entering the new trends, and one of them, this quite challenging new tax regimes. So I appreciate your time. I also would like to inform that we expect to take around 1 hour to go through our presentation, and in the end we'll have some Q&A section addressed for any kind of queries that you may have alongside the process, and I hope you enjoy your time with us. So, as I was saying, our agenda for today, we will start with the basic tax residency rules. After, we will go through what you need to register and the tax compliance rules that you have here, because for you to be able to take any kind of advantage of these regimes, you need to have a tax residency in Portugal. So if it's something that you are also looking forward, this can help you make some kind of decisions. As I was saying, we will address 3 different regimes: the return program, the NHR regime, which is no longer in force, but there's still a window of opportunities that we will explain you why, and if you met some kind of criteria, you will be able to still go for it, and the IFICI, which is commonly being designated as the 2.0 version of the NHR. For you to also be able to look at some practical examples, we'll be presenting a case study for you to be able to attend and to understand the main difference between all of these 3 different regimes. And I was mentioning in the end the Q&A session.
Welcome, everyone. So, as Raquel was saying, the important and first step to become a tax residency and then apply for these regimes is the acquisition of this tax residency in Portugal. So we will be focusing on these first 2. So by the book rule, if someone spends more than 6 months consecutive or interpolated during a 12-month period, or if that same person is not for more than 6 months in the country, but has here a primary house in Portugal, a house in conditions that suggest the intention to maintain it and occupy as an habitual resident, that same person is becoming a tax resident in Portugal. It is considered that someone is tax resident from the first day of stay in Portuguese territory and is non-resident from the last day, meaning that we have here a partial concept of residency. If someone comes to Portugal right now in April and changes the tax address because he's starting to live here, that tax residency will start from April and on, meaning that from January until March or until 15th of April, that same person was considered as non-resident for tax purposes. And the same thing happens if we are talking about non-residency, which is last day of stay. We have here some exceptions. The exception for this residency from the first day of stay is someone that's considered resident for the whole year if that same person was resident in Portugal in the previous year. So that same example that I gave about someone coming in April 2025, if that person was already a tax residency in 2024, we have here residency for the whole year. Also, we have an exception to be considered someone as a resident for the whole year. If we are talking about someone that returns in the year following the year of loss of residence, or someone that spends more than 183 days in the country and at the same time, cumulative, obtaining an income after leaving Portugal that is not taxed by an identical tax that we have here in Portugal, applied in the foreign country or the country of residence. In terms of obligations, a Portuguese citizen changes the tax address to Portugal through the citizen card. So it's an electronically request that can be done. If we are talking about someone that is not Portuguese, so a foreign national, it needs to be done at the tax office. It can be physically or online. And with the presentation of a lease contract, an European Union citizen registration, if we are talking about someone that is a citizen from the EU, or a residence permit if we are talking about someone from non-EU country. Also very important to bear in mind, we have several tax obligations in Portugal and compliance to be done, depending on tax residency or not. Tax resident in Portugal is taxed on the worldwide income. So it's very important to keep the tax registration updated, meaning if you are resident or not, have that updated since we have 60 days from the amendment of the tax to do it. We also have filling personal income tax return, validation of expenses that can be used as deductions. And then, of course, depending on income received or not from a Portuguese source, we also have some other obligations that need to be carefully analyzed in a case-by-case analysis. Someone that wants to change address outside of Portugal, we also have the same procedure for a Portuguese citizen and for a foreign national at the tax office with the presentation of a proof of address abroad, for instance, an utility bill. We also need to combine this change of address with the appointment of a tax representative when transferring residency outside of the EU or the Schengen zone. Same thing for someone from a non-EU country. Whenever they want to apply for tax residency in Portugal, the first step is to get a tax number. And since everyone applies for a tax number when they are not considered as tax residents, this appointment of a tax representative is also a mandatory one. We are going through the special regimes that we have in Portugal, starting with the return program. Then we will go through the NHR and we will explain why the NHR, although many of you may heard that it is revoked, the reason why we are talking about it. Then we will be talking about the IFICI regime, or known as NHR 2.0, and we will then go through a comparative analysis of the three regimes.
So I will address the return program, and the reason why we decided to mention it is because recently it was changed. So it's not only applicable for Portuguese citizens that decided to move back to Portugal, but for anyone that has been living or has lived here in Portugal way before 5 years. So the return program has a period of 5 years. So the tax benefit is applicable during 5 years. And the eligibility criteria are a person must qualify as a tax resident in Portugal by 2026. We don't know yet if next year this program will be prorogated and therefore enforced for the following years. But currently, this is what the law predicts. It's also applicable for someone that was non-resident in Portugal in the previous 5 years, but must at some point of his or her life has been resident in Portugal any other period before those 5 years. This person can have any debt in terms of taxes and must not have never benefited or applied to the NHR scheme, meaning like in your specific case, if you are still eligible and wanting to move to Portugal, or if you are already benefiting from the NHR and for some reason this could be more advantage to you. Truth is that you can have both. So someone that prior to this already benefited from the NHR can't apply for the return program. It's like a one-shot opportunity. Choose from your side. In terms of benefits, so the benefits are the exclusion from taxation of 50% of income from dependent work and business and professional income with a limit of 250,000 euros. So this is applicable for someone that, regardless of the type of the work, comes to Portugal and works here as a self-entrepreneur or a freelancer or as an employee. In terms of registration, you don't need to do anything at the beginning. So you will have after, when it comes the time for you to submit your tax return, to request the application of this return program. And if it's the case of you being an employee, you must submit a declaration to your company, to your employer, stating that you benefit from these regimes so that they can share that information with the tax authorities. In terms of compliance with the requirements, as I was saying, qualifies as a tax resident in Portugal until 2026, has not been a tax resident in Portugal in any of the previous 5 years, but has been resident in Portugal in the past, regardless of being of Portuguese citizenship or not. Like this, you will have the possibility of benefiting from the return program, no record of any kind upfront, and the main benefit, as I was explaining, is the exclusion of 50% of category A or B, which corresponds to salary and independent worker, freelancer, over the income for tax purposes with the limit of 250,000 euros. Now, we are going to address the former, let's call it like that, NHR regime, and who can benefit from the NHR scheme. People who qualify as tax residents in Portugal in a given year and have not been considered tax residents in Portugal in any of the 5 years prior to the year referred above. So you can't have been considered tax resident until the year that you change your tax residency here, and meet one of the requirements stipulated by the transitional regime, because as you may have seen the news, and it was quite publicized, this measure from January 1st, 2024 is no longer possible for you to apply for the NHR regime. However, a little bit ahead, you will understand why we mentioned this regime. So, if someone that is hearing us meets one of these criteria, they can still benefit from the NHR regime. So, taxpayers who are not currently considered to be resident in Portugal, but become tax residents until December 31 of the year 2024, could have requested by March 31, 2025, so a couple of 15 days ago, you could have requested this benefit. One of the, meaning like you need to have, to be able to apply for this transitional regime, you must have had a promise or a contract already signed of employment until December 31, 2023, should have or at least or has a lease agreement or other kind of agreement that grants you the usage of a real estate property in Portugal, signed until October 10, 2023. You must have done or has already, in fact, by October 10, 2023, a reservation or promissory purchase of acquisition of a property, or already acquired the property by said date, enrolled or have your kids enrolled or registered your dependents in educational establishments until October 10, 2023. You must have submitted or requested a residency visa, or already have a residency permit valid until December 31 of 2023, and or at least have started the procedure to have by December 31, 2023, have been granted a residency visa or started said process. We decided to mention this because recently, and even before the regime was revoked, you had until the end of March of the following year, where you change your tax address to Portugal, for you to request the NHR regime. So a lot of people weren't aware of that, and they were being rejected by the tax authorities to have access to this tax benefit. So some people start going to court, and we have several decisions from the higher administrative court in Portugal. So meaning higher decisions, so nobody above can revoke those decisions, saying that the mere lack of registering yourself by March 31 of the following year of the tax residency change doesn't necessarily means that you won't have access to it. So you can still register yourself after it. And this here that you can read is a case ruling example where this happened. And I can guarantee that even here in our office, we have done this before. And the tax authority was mandated to accept the registry even after said period. So imagine, based on the criteria that I mentioned before, if, for example, you had your kids enrolled by 10 October 2023 in a Portuguese school, or you have started a residency permit or a visa request by the end of 2023, and you change your tax address to Portugal in 2024, you can still apply for it. Even in cases, a little bit deeper now, even in cases where you have changed your tax address before, you can at any time request this change. What happens is that most likely the tax authorities won't accept it at the beginning, so you'll need to juggle with them a little bit, perhaps going to court, but in the end you have previous and precedent strong cases that can support your situation. In terms of the NHR regime, what are the benefits? The main benefits are that you will have a special tax rate of 20% applicable to the income from employment and self-employment work that is obtained from a high value added activity. These activities are published in a specific list provided by the Portuguese government, and the exception with progression from foreign source income over professional income, pensions, property income, capital gains, interest, dividends, as well as other capital incomes, provided that certain conditions are met. Just for your information, the exemption with progression means that although the income is exempt, and focus now that you are tax resident in Portugal, you will need to declare your worldwide income. So one thing is your obligation to declare the type and the amount of the incomes. Different is over which incomes will I pay the taxes. So this is the reason why we mentioned that it's exemption with progression, because when you declare your worldwide income, the tax authorities will know the full amount of income that you received and your applicable tax rates, the standard ones that won't be applicable any kind of exemption. That rate will be the one that will be applicable if your tax income, if your income will be taxed here. So this program lasts us in a consecutive period of 10 years. Just a heads up, as I mentioned before, the return program has a period of 5 years, but the NHR is 10 years. In terms of procedures, as I was mentioning, applications to join the NHR ended on March 31, 2024 for applicants that became tax residents in 2024 and fulfilled those transitional criteria. But according to the court decisions that I just mentioned, you can still be doing the requests to apply for the NHR even from 2018, 2019, and so on. The application for the registration under the NHR scheme must be made electronically, so it's all online on the tax authority's website. In terms of the benefits, I'm going now to address different type of incomes, how they are taxed in Portugal, if they are from Portuguese sources and if they are from a foreign source. So income from employment, in the case if you benefit the NHR, the taxation will be 20% over the income that you received, counting that this income comes from a high added value activity. If it is income from employment obtained abroad, it will be exemption with progression, as long as this income was effectively taxed in the state of source. So if for you imagine to be able to have a benefit of exemption here in Portugal for a work that you have done, for example, in the United States, you must prove to the tax authorities in Portugal that you in fact paid taxes over that income, for example, in the United States. In terms of pensions, in Portugal, they will be taxed at a progressive tax rate of between 30% up to 48%. However, if these pensions are obtained from abroad, they will be taxed at a 10% rate. Income from independent work, meaning like self-entrepreneur, it's the same as the income from employment in Portugal, meaning if it's the independent work that you are doing results from a high added value activity, it will be taxed at a flat tax rate of 20%. In terms of obtaining the same type of income, but from a foreign source, meaning you work for someone abroad, there will be this income will be exempt with progression if arising from a high value activity, again, this situation, and provided that it can be taxed in the state of source under the Convention to Avoid Double Taxation or the general model that is applicable in case we don't have said convention signed with the country of source. So it's relevant for you to understand that when it's from employment, you need to prove that it was in fact taxed. When it's from self-entrepreneurship income, if you prove that based on the conventions to avoid double taxation, this can be taxed in the state of source, it won't be taxed here in Portugal, so it will be exempt. In terms of capital income, movable capital gains, and property income, if the source of the origin of the income is Portuguese, you will be taxed at a special tax rate of 28% or 25%. We just mentioned both of them because there was a program in Portugal for the housing situation where they reduced a little bit the tax rate for rental income based from residential property. So it will be 25. If it is a commercial store, for example, it will be 28. Also on real estate capital gains from Portuguese source, you will be taxed, the gain will be taxed over 50% of that gain, with progressive tax rates between 30% until up to 48%. In the both cases of the capital income, movable capital gains, property income, and real estate capital gains, they are exempt with progression, provided that this income could have been, not necessarily must have been, but could be taxed in the source of origin. In terms of duration, as I was saying, it's a 10-period program. In terms of criteria, is a tax resident in a given year, and you cannot have been tax resident in the previous 5 years in the year that you change your tax address to Portugal, and complying with the transitional provision based on the criteria that I mentioned before. The main benefits are the exemption with progression on most of the foreign incomes, and in terms of the income that you have based in Portugal for the ones that work in a high value added activity, it's a flat rate of 20% regardless of your income being from employment or self-employment. In terms of registration, as I mentioned before, it's an online process in the tax authority's website, and you have the tax rate of the 20% is automatically applied to your income. Even when you start doing your tax return submission, you will have a specific form for you to explain that. Here you have some samples or examples of the list of the high value activities that we have. So someone that is a director of administrative and commercial services, someone that works in the creative and performing artist field, science and engineering technicians and professions, so anyone related with information and communication technology technicians. So all of these type of activities are considered of high value. And if you have income from them based and sourced in Portugal, you will have a tax rate of 20% over that. In terms of sorry, as I was saying, there is no need to obtain a prior recognition from the tax authorities. When you do the registry for this specific type of activity that you have, as you could see in the last slide, you will have a code of activity where you need, when you do this, the tax return, to mention the high value activity, and therefore the 20% tax rate will be applicable there. And since everyone is in a good faith, if needed, you don't need to prove anything upfront, but the tax authorities can come and ask you to prove after the submission of the tax return, to prove that in fact the work that you were doing as an employee or as a self-entrepreneur, to prove that it was a high value activity. The special rate of 20%. So the fee applies automatically when the requirement of the NHR schemes are met. The paying entity. So imagine you are working as with an employment contract. So the paying entity is obliged to withhold tax at the time of the payment on making available the payment, the money to you at a special rate of 20%. Because, for example, if it's ordinary income, not from any high added value activity, it could be, for example, 25 rather than just 20%. So this will allow the tax to be more equitable compared to the regime that you benefit from. I was mentioning is not just for someone who is employed, is also when it's self-employment. If, for example, the person that it's paying to you is a company, so it's mandatory to withhold tax. And as I was mentioning, you need to mention, look, I'm a NHR, it's a high added value activity, so my withhold tax must be only 20%. The tax authorities will after validate your situation, and as I was saying, they can ask for you to prove it was a high value added activity, so that they can be sure that the 20% rate was correctly applied. If the tax authorities concludes that the requirements for the 20% rate are not met, both the company that withholds the tax and you may be subject to additional charges, interests, and penalties. Compliance with the requirements as a resume qualifies as a tax resident in Portugal in a certain year. You have not been a tax resident in Portugal in any of the previous 5 years of the year of the change your tax address to Portugal, and meet one of the requirements mentioned by the transitional regime to become a tax resident in 2024. Therefore, if all of these are complied, NHR registration is still possible. Application of a special tax rate of 20% to income earned from high value-added activities, and has a period of 10 years from the tax residency year. We will now pass to the IFICI, in Portuguese IFICI, and commonly known as the 2.0 version of the NHR.
So at this time, you might look at this slide and think that it is completely the same that Raquel was mentioning for the NHR. It actually is in the first two requirements. So people who qualify as tax residents in Portugal in a given year and that have not been considered tax residents in the previous 5 years, previous to the year referred as the year of the tax residency. But we have now also a different thing in this IFICI regime, which is that same person needs to carry out an activity that fall under one of the legal categories, and we'll go through them. So at this point, we can see already that a big difference between NHR and IFICI regime is that in the NHR, you could have an activity in Portugal, and if it was considered as a high added value one, you would benefit from a rate of 20%. But even if you didn't have an activity in Portugal, you would still benefit from the remaining benefits that Raquel was mentioning about the NHR, that would be applicable to the other types of income that someone could have. In the IFICI regime, we have tax residency without tax residency in the previous 5 years, and we also have this activity under the ones that are approved. Who can't benefit from this regime? People that have applied for the NHR and people have opted for the taxation under the return program. We have multiple activities that in the IFICI regime can be approved. We will focus on the ones that are highlighted. I will start by the other ones. So in terms of IFICI activities, we have teaching in higher education and scientific research. We have 3 that are related with tax incentives that a Portuguese company can ask. And we are talking about, for instance, contractual benefits for productive investment, or companies that have applied for and benefited from the investment support tax regime, which is called FI, or even research and development of personnel whose costs are eligible for the system of tax incentives for research and business development. So these 3, we are talking about companies that are already in operation in Portugal, that have applied for tax incentive regimes, and that can have qualified people to work with them, and that those qualified people can apply for the IFICI regime. So we have always a company that needs to be eligible, and the taxpayer, employee or freelancer also eligible in terms of IFICI. We will focus in this webinar in highly qualified professions developed in companies whose main activity corresponds to an economic code that is defined, and we will see that. So it's a company that needs to have a specific type of activity, plus needs to export at least 50% of their turnover. We will also talk about the possibility of applying for the IFICI regime through qualified jobs and members of corporate bodies. So we are talking about managers and directors of Portuguese companies carrying out activities that are recognized, and also jobs and members of governing bodies in entities certified as startups. So in terms of highly qualified profession, we have here the list of what is considered as a highly qualified profession. It is basically the same list that we have for the NHR, some exclusions here. What we have new from the NHR to this list, it's also that the taxpayer that is, for instance, a director of an administrative service needs to own at least a PhD, or if it's not owner of a PhD, then we need to have a degree, like a bachelor degree, plus 3 years of proven experience in that same job. In terms of the companies, we have here the economic codes of industrial and service companies that are eligible for this. So you have extractive and manufacturing industries, information and communication activities, higher education. So we are always talking about someone that is inside the list of the highly qualified activity, plus a company that is inside of this list and that exports at least 50% of their turnover. Meaning that if we have someone, for instance, a CEO of a company that is a manufacturing industry, but that does not export at least 50% of the turnover, according to this specific activity, it wouldn't meet the requirements. So we have a cumulative regime for the company. First, in terms of activity, and then in terms of exportation. We also have here some examples to give it to you. For example, an analyst or a programmer, because the companies related with IT, computer programming, consulting company related with IT are eligible. A director of manufacturing or a director of transportation of a company that has the business scope of electrical equipment, in food or textile or metal industry, for instance. We all have, for example, a dentist, but we don't have, for instance, a real estate company or real estate as the list of the economic code that is eligible for this. And again, we are focusing on highly qualified profession in a company that is approved, plus that exports 50% of the turnover. Then another possibility that we have is other qualified jobs and members of governing bodies. Again, we are talking about managers, directors in entities that are carrying out activities that are recognized by ICEP or IAPME as relevant to our national economy. So here we have highlighted in bold the qualified jobs that are also applied for this specific activity that is recognized. So we here have more than what we have in the list of highly qualified professions. We have here also, for instance, hotel and restaurant and retail or other services manager. We have finance and accounting specialists, film, theater, television, science, engineer, technicians, and professions of intermediate level. And we also have more economic activities that are recognized as relevant. So we have the same that we had before, but we also have, for instance, here construction, we have accommodation, restaurants, we have financial insurance activities. One just thing that we would like to highlight is that, as you can see, we have divisions and classes and subclasses that we need to consider. So this means that not all the accommodation, for instance, activities are recognized as relevant. So we have inside the list of the accommodation activities that we have some that are eligible and others that are not. So it's always important to look at it. But as you can see here, we have more flexibility than we had in the previous list. Why? Because we have here more qualified jobs, and more qualified jobs, we also have members of corporate bodies, meaning that a manager of a company that is recognized as relevant in terms of scope of business can also be eligible. And in terms of economic activities, we also have a broader list than what we had before. So, as I was saying, qualified jobs also includes directors, manager, general managers of a company. And in the previous list, we have that the taxpayer should be owner of a PhD or a degree plus 3 years of proven experience. And here we have that workers must have at least level 5 of the European qualifications framework. And this level 5 is related with post-secondary qualification. Also considered as relevant, we have other economic activities carried out as part of investment projects recognized as being of potential national interest or recognized as projects for the inner areas of Portugal. Again, we have here some examples. For instance, a director or manager of hotels or touristic apartments with or without catering. We have, for example, a financial analyst in a company with fund management activities. We have a director of a manager film, book publishing, radio, TV company. But we don't have, for instance, a manager of a local accommodation company. We also don't have an accountant for activities that are eligible. So again, we have a broader list, we have more flexibility, but of course, all of these qualified jobs, all of these entities, the scope of business of these entities needs to be carefully analyzed in a way that we can really see if it's relevant to the national economy and according to the lists that are approved. Last, we have jobs and members of governing bodies in entities certified as startups. So a startup in Portugal is a legal person that cumulatively has an activity that it's not for 10 years, turnover that is not high, Also, in terms of workers, we don't have that much workers, so it's a company that is starting, and that is an innovating company with a growth potential that concludes the round of venture capital that is financed by a legally qualified entity that has received investment from Banco Portuguese de Fomento or other funds that are managed by it. So whenever we have a startup certified in Portugal, we also have the possibility for someone that is inside a startup or a member of a governing body of that same startup to also apply for the IFICI regime. So the registration procedure, it's quite different from the NHR. So this application must be made by the 15th of January of the year following the start of tax residency in Portugal, and not until the 31st of March. And how? It depends on the specific activity that we are doing. For the activities that we have been discussing until now, we have tax authority in case of highly qualified professions. Again, highly qualified professions in companies that have that are inside the list plus export 50% of the turnover. We have ICEP or YAPME for the other economic activities that are recognized as relevant to the national economy. And we have Startup Portugal for the companies that are certified as startups. In terms of documents to be submitted, we will always need to consider what is actually the activity that is being carried out. So we are talking about employment contract when the activity carried out is an employment a job position, scholarship contract if we are talking about scientific research, declaration issued by the company attesting the compliance of the requirements related with the activity carried out by the same company. If we are talking about someone that is a director of the company, then we need the up-to-date permanent commercial certificate of that same company. We also need proof of the academic qualification because, as we have seen, we do have a criteria in terms of academic qualifications. Also, for instance, when we are talking about highly qualified activities that are performed in companies that export 50% of the turnover, since we have PhD or degree plus the 3 years of proven experience, we also need the proof of that experience, and we have other documents that may be requested. In terms of benefits, we have a special tax rate of 20% on net income from categories A and B, meaning the same that Raquel was mentioning for the NHR, so related with employment income, self-employment income, within the scope of the activities that we have been seeing until now. And we have an exemption with progression again for foreign source of income except pension. So this is one of the biggest differences well with the NHR is that we have an exemption for the foreign source of income, but pensions is outside of this scheme. The status is valid for 10 years, like it was with the NHR. So we have been talking about what has really changed in relation with the NHR until now. So we have seen this requirement of an activity in Portugal, which makes, of course, the tax incentive more restrict than the NHR. It doesn't include differential taxation for pension income. We have in the NHR the 10%, as Raquel was mentioning, and some of the early birds actually got the 0% on the pension income. Here, it is excluded when we are talking about foreign pension or even pension from a Portuguese source. The IFICI does, however, provide a more direct exemption. Raquel was talking about some types of income that needed effectively to be taxed abroad, or that this possibility needed to exist, at least according to the double tax treaty. Here we have a more direct exemption on the foreign type of income, except pensions. The deadline for the scheme is also something that we already talked about that is different. And the IFICI does not take into account double taxation conventions that we have, like the NHR had. So this also can have a different regime when we are talking about the known as tax havens that have a double tax treaty with Portugal. So to finish and to conclude, we would like to give you a comparative analysis of the three regimes because we know that this is a lot to process. And it's important to kind of understand with a practical example what we have been discussing, because at the end, what is relevant to understand is that if you are in a situation that you can benefit from the three, or at least if you are considering to move into Portugal and you know that you have, for instance, the return program because you already resided in Portugal, or you have the IFICI regime, which of the regimes could be the favorable, the most beneficial one.
So, as Natacha was saying, let's look at an example. It's fictitious, but could be quite real. We had several situations here already this year. So, let's imagine that André, resident in Portugal until 2018 and resident in Turkey between 2018 and 2024, returns to Portugal as a resident in January 2024. He signed the promissory contract for the purchase of a house in August 2023, and Andrea changed his tax address to Portugal in 2024. He is now employed as a data analyst in a startup company, duly certified as such, meaning as a startup. He has an annual income of 120,000 euros, which means a gross monthly salary of 10,000 euros. So we can say from this example that André hasn't been a resident in the previous 5 years of 2024, that he complies with the transitional provision regime of the NHR, because as you remember, I mentioned it when I was addressing the old NHR, that if you sign the promissory purchase sales agreement until October 2023, you could have a criteria that would allow you to benefit still in 2024 from the regime. He also fulfills with the IFICI as a high qualified profession and working in a company with a relevant economic activity. So as Natacha was well mentioning, truth is that you need in the IFICI to combine not only the scope of the activity that you do, but as well as the type of activity if it's not self-employment. So André is a data analyst in a startup qualified for that. So he also meets the requirements to benefit from the return program. Why? Because in the previous 5 years of 2024, he was not resident in Portugal, but André used to live in Portugal prior to 2018. So he could also benefit from the return program. So the big, I think, highlight point here that everyone wants to understand a little bit is the comparison of the different regimes. So in the case of André, and generally speaking, what happens is that if he was a normal resident, for example, like myself or Natacha, the income from employment would have a tax rate of 13 up to 48%. If he was NHR, he would have a 20% flat tax rate over his income because it's a high value added activity. The same in the IFICI and 20%, and the company, in the case of Andrea, it would be applicable. And if it was in the case of the return program, he would have the same normal resident tax rate, so meaning between 13% and 48% over 50% of his income. If Andre, in this case of the example, has foreign source income, he will be as a normal resident, if he was a normal resident, subject to taxation without any tax credit. With the possibility of a tax credit, not an exemption, sorry. If it's an HR regime exemption, provided certain conditions are met. The same in the IFICI, but don't forget, IFICI is for people that still work, not retired ones. So except for pensions, it's not applicable. And in the case of the return program, would be the same as a normal standard resident without any tax benefits. In terms of comparison, normal residency applicable at any time that you are here in Portugal as tax resident. NHR and IFICI is applicable for a period of 10 years and the return program for 5 years. In the case that we were speaking about, so André receives yearly gross annual income 120,000 euros. So we made in different columns how he would be taxed, and we can compare that the net annual income if he benefits as an NHR person would be 85,440,000 euros. The same with the IFICI, with the return program 93,768 euros, and as a normal resident he would only have left to spend roughly 65,500 euros. So you can here see that clearly if Andre is a person that just wants to be in Portugal for 2 or 3 years, I would clearly advise him to benefit from the return program, because he would be less taxed, unless, of course, Andrea would have some income obtained from abroad. In that case, he would be applicable for the IFICI and, in our example, for the NHR. So despite that, I think it's relevant, this example, because despite that upfront, you could see, for example, that the return program would be clearly the best option for Andre, meaning over his income from work. Maybe he has different incomes that in the end wouldn't allow him to have a well tax planned and could benefit more, for example, from IFICI, where he would be completely exempt. So, conclusions is the possibility of taking advantage of any of the schemes in force. So, considering that the NHR can still be requested after the deadline based on precedents and previous case rulings that we had before that even went to the Superior Administrative Court in Portugal. And in the short term, 5 years, the most rewarding one of these regimes is the return program. But of course, don't forget that you have foreign income. Maybe the return program, as I was mentioning in Andre's example, could be most interesting. Maybe in the end, it would end up by taxing you more, for example, over other type of incomes that you may also have. So it's always important to do one-on-one study case for each different situation and type of incomes, and of course country of source. Considering that the NHR and the IFICI are 10-year schemes and will therefore be enforced for at least additional 5 years when compared to return program, in the long term it can be more beneficial to opt for one of these two schemes, considering that after the year 5, for example, in a dress situation, he would be taxed as a normal resident, so only would have like around 65,000 euros left after taxation and so on. For this reason, and depending on whether you intend to stay for long term, we recommend registering as NHR or IFICI, because in the long term it will be more applicable. Natacha, I don't know if you want to wrap it up by showing the savings.
Yes, sure. So just a small note that these calculations are exchanged. So as Raquel was mentioning and well mentioning, the savings in the return program in 1 year, it's around 28,000 euros. And if we see only the NHR or the IFICI regime, we are talking about 20,000. But if we look at 10 years period scheme, and as Raquel was mentioning, since with the return program, after 5 years, you will be taxed as a normal resident. And we already saw that it's not that beneficial if you can take advantage of a tax incentive regime. If we are talking about someone that is coming to Portugal to spend more than these 5 years, then indeed the IFICI regime is the one that should be followed, because it's the most optical one.
And for now, these are all, and it's a lot to access. Even as lawyers, we still struggle with understanding how in practical some of these requests will be met, but we are here to help you and assist you. And I don't know if there are some Q&As that want to be addressed to us. You can do it by written and we can read some and answer, and the other ones we can follow up after. So Natacha, I don't know if you want to see any already existed or if someone wants to add some there.
Yes, we have so we have here a question that I think that we could sorry, could already we could already see that is when a person works for another company, what happens if it in a certain year the exports become less than 50% of the turnover. So we are talking about the IFICI regime. So it's important to mention that the right to be taxed according to the IFICI regime depends on that taxable person to be considered tax resident at any time during that year and continuing to earn in each year income from one of the activities that are listed. And when we are talking about highly qualified profession developed in a company that is with a recognized economic activity code plus that exports 50%, this is one of the requirements. So this means that that same person might lose the access that might have to this IFICI regime. Also, it is considered that that same just out of priority, that same person continues to earn income that is related with this IFICI regime if from the beginning of the new activity we have at least we have not more than 6 months after the termination of the previous activity.
We have also someone asking if we will be replaying our webinar. And first, thank you for the question. Also, I would like to say to that we will be launching CRS YouTube channel, and we will be presenting it there. And I think most likely due to all the queries that we have had and the interest shown in this, let's call it tax hot topics. I think that most likely we will, even more than replay, we do another webinar and we will let you know. And we have some more questions arrive.
Yes, I was also checking that. So we have here, for example, recommendations or ideas for golden visa applicants from the USA. Not looking to stay in Portugal more than 90 days in any given year for at least 5 years. So it's important to bear in mind that one thing is a residence permit based on a golden visa or even a D7 visa, passive income, or an incorporation of a company, a D2. And other thing is tax residency. So as we were saying at the beginning of the webinar, for someone to get access to these tax incentives, that same person needs to be tax resident in Portugal. And for that, we need either to have more than 6 months in the country or a primary house, even if we don't have that limit of time. So someone that is a golden visa holder from the USA, from the UK, from Taiwan, so this applies regardless of the country. That is not staying the majority of the time in Portugal, not relocating, actually that person is not a tax resident in Portugal, meaning that these tax incentives don't apply, but at the same time that the income that is taxed in Portugal is not the worldwide income, but only the Portuguese source of income. So if there's any Portuguese source, imagine we have here a house that is being rented, there's of course taxes to be paid because of that income that is being received. If we are talking about, for instance, golden visa holders in venture funds that are not related with real estate, that is also Portuguese source of income, but can be exempted. If we are talking about people that don't have domicile in a tax haven. So, but broadly speaking, a golden visa applicant that doesn't want to relocate to Portugal is not a tax resident, therefore only pays in Portugal taxes related with Portuguese source income.
We have also someone, and I think it's related with what Natacha was saying, just to clarify, a person can qualify for one of these tax regimes only after completely the residence application process, correct? So one thing is the residency permit that allows you to legally change and move and relocate yourself to Portugal. After that, you need to register yourself as a tax resident. And for you to do that, you need to prove that you have a legal way of staying here. So depending on the type of the residency program, of course, that sometimes you don't need to wait literally until the end of it, because you can submit the request and be considered regular residing in Portugal, because you are just waiting for the immigration office to allow you, the immigration office will allow you to stay here in Portugal as a regular, but you are still waiting on the government, on the immigration entity to perform their work. So one thing, it's always important to understand how legally can I move into Portugal, how can I become a tax resident, which is completely separate. Another question that we are being asked is that if the GV property investment counts as a primary home. First, it depends on the Golden Visa property investment that you made and the type of property. Because imagine if you purchased a commercial store, it's not its usage, it's not considered for residential, therefore it's not considered your primary home. Nevertheless, of course, the Golden Visa investment, when it was applicable for real estate investment, could qualify if it's for residential, for example. And in that case, it can count as a primary home if you move to Portugal and you will reside there and request your tax authority to put your primary residency in that investment. I don't know if there are more any questions arriving. And we are close to 1 hour of our webinar. I would like to thank you everyone who had the patience to join us. And I'm just going to answer to a new one who is asking if tax residency is only under 60 days here. Natacha, do you want to answer because you spoke on this one?
Yeah, so the tax residency rules are related with someone staying more than 6 months in the country or having here a house that has an intention to maintain it as a primary house. These are the by the book tax residency rules.
So we, as promised, we took 1 hour and it's a long and a lot of information. So again, I would like to appreciate all of you who have joined us. And it was our first one, so it's a lot of information. So we are still also struggling a little bit on the best way to pass and simplify what it's from the beginning really complicated. And once again, feel free to reach us. You know where to find us in Lisbon, Porto, and Algarve, or somewhere around the world that we will be traveling quite a lot this year. But jokes aside, it was a pleasure sharing with you a little bit of our tax passion in Portugal with you guys. Thank you.
Thank you all.